Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Sanjana Prabhakar. She's the Index Research Specialist with Nasdaq Investment Intelligence to discuss the Nasdaq CB Insights Metaverse UCITS Index and long-term market opportunity within the Metaverse space. Sanjana, it's great to have you with us. Welcome to Trade Talks.
Hi, Jill. Thanks for having me back today.
You got it. And first, explain to us what the Metaverse actually is and some insight into the index and what it actually tracks.
Sure, Jill. So quick preview into what Metaverse is. As we see it, Metaverse is an extension of our lives enhanced by technology. So think of detailed online worlds that people will plug into using virtual reality tools. And here they can participate in a variety is including gaming, shopping, and even purchasing property, essentially extending their real-world identities to the digital realm. Recent news surrounding the metaverse has been somewhat negative, focused on potential layoffs and the large sums spent on realty labs. And this has generated a sense of pessimism among market participants, particularly over the near-term outlook. Over the long term, the market opportunity appears to be intact, and that's something that we'd like to flag, with several large technology, media, and entertainment companies taking strong actions to shape the metaverse. As a case in point, Sony is planning to release its virtual reality headset this year, and there's early indication that Apple is entering the augmented reality space in 2023. Additionally, venture capital firms are providing backing as well, suggesting that the market is ripe with opportunity. Again, as a case in point, the Sandbox received $93 million from SoftBank. And that's something that we wanted to flag. Now providing a very quick overview, as you can see in slide 1, some insight into the Nasdaq CB Insights UCITS Metaverse Index, which was launched in July of this year at a base value of 1,000. And as you can see, it's designed to track companies engaged in the metaverse economy that are producing the sort of technology building blocks, the software and the hardware, also providing products, services, and experiences within the metaverse. So the full range of offerings. And CB Insights, who we have partnered with, has classified companies into 3 buckets, which we have highlighted in one of the boxes here. As you can see, they're pure play, hybrid, and adopter, depending upon whether the product or service offering is metaverse related. And CB Insights has also further classified companies into 3 subsectors, including economy, infrastructure, and interface. And if we move over to the next slide, we provide some insight into the methodology. And as you can see, the index has been carefully constructed with eligible securities given a metaverse intensity score calculated by CB Insights' proprietary scoring mechanism. And to ensure adequate liquidity, companies must have a minimum market cap of at least 1 billion and minimum 3-month average daily traded value of 500,000. And if you can notice, we have a primary and secondary screening to adjust the weights in the index, and we have provided more details in the last 2 boxes here.
Tell us about the composition of the index. It sounds like it's largely a large cap tech focused index.
Yes, that's right, Jill. As you can see here in this slide, the index is made up of 50 companies, and wanted to flag that this is an equal weighted index. Top 20 companies make up 62% of the index weight, suggesting some concentration at the top. As you mentioned, large cap companies make up the largest weight and make up about 74% of the index weight, and includes the likes of heavyweights such as Apple, Meta Platforms, Microsoft, Alphabet, Amazon, Walmart, and NVIDIA. These companies are taking actions to shape the metaverse. For example, Microsoft is set to acquire Activision Blizzard. Sony is planning its release of its PlayStation virtual reality headset. And as I indicated earlier, there's a possibility of Apple entering the augmented reality space in 2023. Other quick stats, United States has the largest country weighting with 63% of the index weight, comprised of companies domiciled here. And as a survey cited by McKinsey reveals, about 70% of US consumers actually rate their digital identity as somewhat important, very important. And we believe that there is a shift towards a truly creative-focused economy in the open metaverse, which is likely to provide a fillip to growth. And if you can look to the right, you can see that the top 20 names, you see a healthy representation of technology companies such as Microsoft, Alphabet, Apple, Meta, Qualcomm, all leading incumbents in technology. We also see companies such as Roblox, which reportedly had nearly 55 million daily average users in Feb and generated 1.9 billion in revenue in 2021. So that's pretty impressive. Another leading incumbent in technology, Apple, is reportedly developing an augmented reality headset called Reality One that could hit the market in 2023. Sony has a version of the metaverse that is quite unique from other participants in that it envisions a world where people can come together to share time and space, and that's something that we'd like to flag. So several indications of top participants actively engaging within the metaverse theme, suggesting long-term potential.
And if we drill down a little bit deeper in terms of geographic and subsector exposures.
Sure. So if you can look at the geographical exposure of NC Meta, which is the ticker, as you can see in the chart to the left, 64% of the index weight is comprised of 28 companies domiciled in the United States. And wanted to flag that the expected global slowdown is likely to slow virtual reality and augmented reality unit growth. Further, high price points and competition from simulated AR experiences are also likely to weigh on growth, both in the US market and in the international market. And what we are seeing is that the international segment has also been dragged down a bit by exposure to China's worsening economy and regulatory headwinds. And if you look at the next slide here, in terms of subsectors that I mentioned earlier, the interface subsector comprises 61% of the index weight, followed by infrastructure and economy. And as you can see, the interface subsector was down about 43% year to date, which was sort of in line with the other two subsectors of the index.
And finally, Sanjana, how about index returns?
Sure. So as you can see in the slide here, all but one index constituent was actually down this year, dragged down by several factors, including investor pessimism towards high growth tech stocks, some uncertainty surrounding the experimental nature of bets in the metaverse, and concerns about metaverse and generating investment risk. And as you can see, Roblox, EXP, Naver, Meta platforms were all down more than 50% year to date on average, due to fears of a recession, tougher post-pandemic comps, and also losses in the metaverse that have raised some concerns, slowing revenue growth and regulatory headwinds. Apple and PTC saw declines that were relatively more muted, and that's something that we wanted to flag.
All right. Appreciate the insight as always, Sanjana. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.